Question 1. Which of the following best defines the principle of indemnity in insurance? A. The insured will always be paid the full value of the loss, regardless of the coverage limit. B. The insured is compensated for a loss, but not to exceed the value of the loss or the policy limits. C. The insured will receive an amount that exceeds the policy limits if they suffer a significant loss. D. The principle of indemnity allows the insured to recover both financial losses and emotional distress. Answer. B. Explanation. The principle of indemnity ensures that an insured person is compensated only for the actual loss sustained up to the policy's coverage limit. This principle is designed to prevent the insured from making a profit from the insurance policy and to place the insured in the same financial position as they were before the loss occurred. Why not? A. The full value of the loss is not always paid if it exceeds the policy limit. Why not? C. The insured does not receive more than the loss amount or policy limit. Why not? D. Emotional distress is not typically compensated under the indemnity principle. Question 2. Mr. Smith has a homeowner's insurance policy that includes a $2,000 deductible. After a storm, his roof is damaged and the repair costs are $10,000. How much will Mr. Smith receive from his insurer for the roof repair after the deductible is applied? A. $2,000. B. $8,000. C. $10,000. D. $12,000. Answer. B. Explanation. The deductible is the amount the insured must pay out of pocket before the insurance coverage kicks in. In this case, the repair cost is $10,000, but Mr. Smith must pay the $2,000 deductible, so the insurer will cover the remaining $8,000. Why not? A. The deductible is subtracted from the total loss, not the amount the insured receives. Why not? C. The insured will not receive the full $10,000 due to the deductible. Why not? D. The insurer will not pay more than the loss amount after the deductible is applied. Question 3. Scenario-based. Mr. Johnson recently purchased a life insurance policy and provided false information about his smoking habits on the application. A few months later, Mr. Johnson passes away from a smoking-related illness. What is the most likely outcome regarding the life insurance claim? A. The insurer will pay the full death benefit as the policy was valid at the time of purchase. B. The insurer will deny the claim as the false information about smoking constitutes fraud. C. The insurer will pay the death benefit but only after a waiting period. D. The insurer will adjust the death benefit to account for the false information provided. Answer. B. Explanation. Providing false information during the application process, especially regarding material facts like smoking habits, can lead to a denial of the claim. Insurance policies include a clause that allows insurers to void the policy or deny claims based on misrepresentation or fraud. In this case, the misrepresentation about smoking would likely constitute fraud and the insurer would deny the claim. Why not? A. The insurer has the right to deny the claim due to misrepresentation or fraud. Why not? C. There is no typical waiting period for cases involving fraud. Why not? D. The insurer may void the policy entirely rather than adjust the death benefit. Question 4. Which of the following is true regarding Kansas no-fault auto insurance law? A. It provides full coverage for all damages regardless of fault in an accident. B. It requires the at-fault driver to pay for damages and injuries. C. It mandates that each driver's insurance cover their own injuries, regardless of fault. D. It only applies to accidents that occur on public highways. Answer. C. Explanation. Kansas operates under a no-fault auto insurance law, meaning that each driver's own insurance company is responsible for covering their medical expenses and certain other costs regardless of who caused the accident. This system is designed to reduce litigation and provide quicker compensation for medical expenses. Why not? A. No-fault insurance only covers personal injuries, not all damages. Why not? B. The no-fault law limits the at-fault driver's liability for injuries to other drivers. Why not? D. No-fault law applies to all accidents within the state, not just those on public highways. Question 5. In a property insurance policy, which of the following is considered a moral hazard? A. An individual working in a high-risk profession, such as a firefighter. B. A person intentionally causing damage to their own property to collect insurance. C. An individual failing to maintain their property in a safe condition. D. A person's house being damaged by fire caused by natural disaster. Answer. B. Explanation. A moral hazard refers to the risk that the insured may engage in dishonest or unethical behavior, such as intentionally causing damage to property in order to collect insurance benefits. This type of behavior increases the insurer's risk and is an example of moral hazard. Why not? A. High-risk professions do not constitute moral hazards. This is a physical hazard. Why not C? Failing to maintain property is a physical hazard, not a moral hazard. Why not D? A fire caused by a natural disaster is an example of a peril, not a moral hazard. Question 6. Scenario-based. MS. Taylor has a health insurance policy that covers 80% of her medical expenses. She incurs a total medical bill of $12,000. What amount will MS Taylor be responsible for paying assuming no other coverage applies? A. $2,400. B. $3,600. C. $4,800. D. $9,600. Answer. B. Explanation. In this scenario, MS Taylor's insurance will cover 80% of the $12,000 bill, which amounts to $9,600. The remaining 20% is her responsibility, which amounts to $3,600. Why not A? The insured pays 20%, not 10% of the total bill. Why not C? $4,800 would be 40% of the total bill, which is incorrect. Why not D? The insurance company covers 80%, so MS Taylor only owes 20% of the bill. Question 7. Which of the following is a key characteristic of term life insurance? A. It accumulates cash value over time. B. It provides coverage for a specific period and does not accumulate cash value. C. It provides lifelong coverage and pays a death benefit. D. It is a type of disability income insurance. Answer. B. Explanation. Term life insurance provides coverage for a specific period term such as 10, 20, or 30 years. It does not accumulate cash value, and if the insured dies during the term, the death benefit is paid to the beneficiaries. If the insured outlives the term, the policy expires without any payout or accumulation of value. Why not A? Term life insurance does not accumulate cash value. This is a feature of permanent life insurance policies. Why not C? Permanent life insurance provides lifelong coverage and a death benefit, unlike term life insurance. Why not D? Disability income insurance is a separate type of insurance that provides income replacement, not life insurance. Question 8. Which of the following statements about declarations in an insurance contract is correct? Declarations outline the exclusions and coverage limitations of the policy. B. Declarations provide personal information about the insured, such as their name, address, and policy details. C. Declarations include the specific terms for claims handling and procedures. D. Declarations are added to the policy as a rider to provide additional coverage. Answer. B. Explanation. The declarations section of an insurance policy contains the essential details about the insured, such as the policyholder's name, address, the coverage amounts, and the policy period. It serves as an overview of the contract's basic information. Why not A? Exclusions and coverage limitations are typically listed in other sections of the policy, such as a exclusions or conditions section. Why not C? Claims handling and procedures are generally found under the claims or conditions section, not in the declarations. Why not D? Riders provide additional coverage and are separate from the declarations. Question 9. Which of the following is an example of a casualty insurance policy? A. Workers' compensation insurance. B. Homeowners insurance. C. Life insurance. D. Auto insurance. Answer A. Explanation. Casualty insurance includes policies that cover liability risks and losses arising from accidents or injuries. Workers' compensation insurance is a type of casualty insurance that provides benefits to employees who are injured at work. Why not B? Homeowners insurance is a type of property insurance, not casualty insurance. Why not C? Life insurance is a type of life insurance policy, not casualty insurance. Why not D? While auto insurance can include liability coverage, it is primarily considered a property and casualty insurance policy, but it is not purely casualty insurance. Question 10. Which of the following is a responsibility of an insurance producer agent when handling a claim? A. The agent can decide whether a claim is valid or not. B. The agent must provide financial assistance to the claimant if the insurance company is delayed. C. The agent should help the insured gather information and submit the claim to the insurer. D. The agent is responsible for paying the insured's claims directly from their own funds. Answer C. Explanation. An insurance producer agent plays a role in assisting the insured with the claims process. The agent helps the insured gather necessary information, complete the claim form, and submit it to the insurer, but they do not have authority to decide the claim's validity or pay out claims. Why not A? The agent does not have authority to decide the validity of a claim, and this is determined by the insurer. Why not B? The agent does not provide financial assistance. The insurance company handles claim payments. Why not D? The agent does not pay claims out of their own funds. They help facilitate the claims process between the insured and the insurer. Question 11. Which of the following best describes an umbrella policy in insurance? A policy that covers losses not covered by primary policies. B. A policy that provides coverage for only one type of peril, like fire. C. A policy that is required by law for all homeowners. D. A policy that exclusively covers business liabilities. Answer A. Explanation. An umbrella policy provides additional coverage beyond the limits of underlying policies, such as homeowners, auto, or other types of insurance. It is designed to cover broader risks that may not be included in standard policies. Why not B? An umbrella policy covers multiple types of risks, not just one peril. Why not C? An umbrella policy is optional and not required by law. Why not D? Why, it can provide business liability coverage. An umbrella policy is not exclusive to businesses. Question 12. Which of the following is the primary purpose of a deductible in an insurance policy? A. To reduce the cost of premiums. B. To determine the insurance company's liability. C. To exclude certain risks from coverage. D. To specify the maximum amount the insurer will pay for claim. Answer B. Explanation. A deductible is the amount the insured must pay out of pocket before the insurance company begins to pay for covered losses. It helps determine the amount of liability the insurance company will cover. Why not A? While deductibles can impact premiums, they are not primarily designed to reduce premium costs. Why not C? A deductible doesn't exclude risks but sets the amount the insured is responsible for before coverage begins. Why not D? The deductible is the portion the insured pays, not the maximum payout by the insurer. Question 13. Scenario-based. John has a home insurance policy with a $500 deductible. If he suffers a covered loss that results in $4,000 in damage, how much will John's insurance company pay? A. $3,500. B. $4,000. C. $4,500. D. $500. Answer A. Explanation. John's insurance company will pay the amount of the damage minus the deductible. The $4,000 damage minus the $500 deductible means the insurance company will pay $3,500. Why not B? The deductible must be subtracted from the total damage amount before the insurer pays. Why not C? $4,500 is incorrect because the deductible must be accounted for. Why not D? The deductible is what John has to pay. The insurer pays the remaining amount. Question 14. Which of the following best describes coverage A in a homeowner's insurance policy? A. Coverage for personal property damage. B. Coverage for the physical structure of the home. C. Coverage for medical expenses to others. D. Coverage for losses due to natural disasters. Answer B. Explanation. Coverage in homeowners insurance typically covers the physical structure of the home itself, including the walls, roof, and other essential parts of the building. Why not A? Coverage for personal property is typically covered under coverage C. Why not C? Medical payments to others are covered under coverage F, or a separate clause in the policy. Why not D? Natural disasters may be covered under specific endorsements or additional policies, not typically under coverage A. Question 15. Which of the following is a common exclusion in most property insurance policies? A. Fire. B. Theft. C. Wear and tear. D. Vandalism. Answer C. Explanation. Most property insurance policies exclude damage due to wear and tear, deterioration, or lack of maintenance. This exclusion is designed to prevent coverage for damages that are gradual rather than accidental. Why not A? Fire is typically covered unless excluded by specific policy language. Why not B? Theft is generally covered under property insurance policies. Why not D? Vandalism is typically covered under most property policies, although there may be exclusions for certain circumstances. Question 16. Scenario-based. Sarah has an auto insurance policy with a $1,000 collision deductible. After a car accident, her car incurs $6,000 in damages. How much will Sarah need to pay out of pocket? A. $1,000. B. $5,000. C. $6,000. D. $7,000. Answer A. Explanation. Sarah will need to pay her deductible, which is $1,000, before the insurance company covers the rest of the damages. The insurer will pay the remaining $5,000 of the $6,000 in damages. Why not B? Sarah pays the $1,000 deductible and the insurer covers the remaining $5,000? Why not C? The insurer covers the damages minus the deductible. Why not D? Sarah does not need to pay the full $7,000, only the $1,000 deductible. Question 17. In which situation would a rider to an insurance policy typically be used? A. To increase the coverage limits of a standard policy. B. To cancel an existing policy. C. To exclude certain perils from coverage. D. To change the insured's contact information. Answer A. Explanation. A rider is an additional provision attached to an insurance policy that modifies its coverage. It is often used to increase coverage limits or add specific coverage for special circumstances. Why not B? A rider does not cancel policies, or this is typically done through a policy endorsement or cancellation process. Why not C? Exclusions are generally listed in the main policy, not in riders. Why not D? Contact information changes are typically handled separately, not through riders. Question 18. Which of the following is true regarding the insured in an insurance policy? A. The insured is always the policyholder. B. The insured may be any individual or entity covered by the policy. C. The insured can only be an individual person, not a business entity. D. The insured must be a resident of the state where the policy is issued. Answer B. Explanation. The insured in an insurance policy refers to any individual or entity that is covered by the policy, which can include policyholders, their families, or even businesses, depending on the type of policy. Why not A? The policyholder is the person who purchases the policy, but other individuals or entities may also be insured. Why not C? Both individuals and business entities can be insured under different types of policies. Why not D? The insured can reside anywhere, and policies can cover out-of-state risks. Question 19. Which of the following is an example of broad form coverage in a homeowner's insurance policy? A. Coverage that provides protection for all types of damage to the home. B. Coverage that only protects against fire and theft. C. Coverage that covers a limited number of specific perils. D. Coverage that includes both personal property and liability protection. Answer C. Explanation. Broad form coverage in a homeowner's insurance policy typically covers a specific set of perils such as fire, theft, vandalism, and others, but does not cover all potential types of damage. Why not A? This is more akin to special form coverage, which provides all risk protection. Why not B? Limited coverage is more typical of basic or named perils policies. Why not D? Broad form primarily relates to specific risks to the home, not to both property and liability. Question 20 is scenario-based. Mike has a life insurance policy with a $200,000 death benefit. After his death, the beneficiary receives the full $200,000. Which of the following best describes this situation? A. The policy has the term life insurance feature. B. The policy is a whole life insurance policy with a death benefit. C. The policy is a variable life insurance policy. D. The policy is a permanent life insurance policy with no cash value. Answer B. Explanation. A whole life insurance policy provides lifelong coverage and includes a death benefit that is paid upon the insured's death. It also typically builds cash value over time. Why not A? Term life insurance provides coverage for a specific period, and the death benefit would only be paid if the insured dies during the term. Why not C? Variable life insurance allows for investment options and may not provide a fixed death benefit. Why not D? Permanent life insurance policies can include both a death benefit and a cash value component. Question 21. Which of the following is true about replacement cost coverage in an insurance policy? A. It only pays for the depreciated value of the property. B. It pays to repair or replace property with materials of similar kind and quality. C. It reimburses for the actual cash value of the property at the time of the claim. D. It applies only to liability claims, not property claims. Question 22. What is the primary purpose of a coinsurance clause in a property insurance policy? A. To reduce the insured's premium costs. B. To ensure the policyholder maintains a sufficient amount of coverage. C. To eliminate the need for a deductible. D. To limit the insurer's liability for large claims. Answer B. Explanation. Replacement cost coverage reimburses the insured for the cost to repair or replace damaged property with materials of similar kind and quality without factoring in depreciation. Why not A? Depreciated value is covered under actual cash value, not replacement cost. Why not C? Actual cash value deducts depreciation from the reimbursement amount. Why not D? Replacement cost pertains to property claims, not liability claims. Answer B. Explanation. The coinsurance clause requires the policyholder to insure their property to a certain percentage of its value, usually 80%, 90%, or 100%, in order to receive full reimbursement for a loss. If the property is underinsured, the insured may have to bear a portion of the cost of a claim. Why not A? Coinsurance does not directly affect premiums but ensures adequate coverage. Why not C? The deductible still applies even with a coinsurance clause. Why not D? The clause aims to ensure adequate coverage, not to limit liability. Question 23, scenario-based. Sarah's home is worth $300,000, but she only insures it for $180,000. If she suffers a $60,000 covered loss and the coinsurance clause requires 80% coverage, how much will Sarah's insurance policy pay? A. $60,000, B. $48,000, C. $54,000, D. $36,000. Answer B. Explanation. Sarah's required coverage is 80% of $300,000 or $240,000. Since she only insured her home for $180,000, which is underinsured, she faces the penalty. The formula for the payout is paid amount insured required coverage x loss. So $180,000 $240,000 equals 0.75. 0.75 x $60,000 equals $45,000. But this does not match any given answer, so it appears Sarah's underinsurance affects her payout, reducing it proportionally. The correct calculation would mean a payout of around $45,000. However, none of the options align directly. Question 24. Which of the following types of life insurance is most likely to include both a death benefit and an investment component? A. Term life insurance. B. Whole life insurance. C. Universal life insurance. D. Variable life insurance. Answer D. Explanation. Variable life insurance provides both a death benefit and an investment component. The cash value can be invested in various options, which can affect the policy's performance. Why not A? Term life insurance only provides death benefit and does not accumulate cash value or include investment options. Why not B? Whole life insurance includes death benefit and cash value component, but does not have the flexibility of variable life insurance's investment options. Why not C? Universal life insurance also includes death benefit and cash value, but its investment component is less flexible than in variable life insurance. Question 25. What is the purpose of liability insurance? A. To cover the costs of repairing damaged property. B. To cover the costs of defending legal claims and settling liabilities. C. To cover the insured's medical expenses. D. To replace lost income due to injury. Answer B. Explanation. Liability insurance covers the costs of defending against legal claims and settling liabilities resulting from injury or damage caused by the insured. It is designed to protect the insured from financial loss in legal matters. Why not A? Property insurance covers repairs or replacements, not liability. Why not C? Medical insurance covers medical expenses, not liabilities. Why not D? Disability insurance is designed to replace lost income, not liability claims. Question 26. Which of the following is considered an act of God? In insurance terms, say a robbery at a business property. B. A fire caused by electrical malfunction. C. A flood caused by a hurricane. D. A car accident caused by driver error. Answer C. Explanation. An act of God refers to a natural event that could not have been foreseen or prevented, such as a flood, earthquake, or hurricane. Why not A? A robbery is a human-caused event, not a natural disaster. Why not B? A fire caused by electrical malfunction is typically considered accidental, not a natural event. Why not D? A car accident caused by driver error is not a natural event. Question 27, scenario-based. Jane's home insurance policy covers fire damage. After fire destroys part of her home, the insurance company appraises the damage at $50,000. The deductible on her policy is $1,500. How much will Jane receive from her insurance company? A. $48,500. B. $50,000. C. $51,500. D. $49,000. Answer A. Explanation. Jane's insurance policy will cover the damage minus the deductible. Since the damage is appraised at $50,000, after subtracting the $1,500 deductible, Jane will receive $48,500. Why not B? The deductible must be subtracted from the total amount of damage. Why not C? $51,500 is incorrect, as the deductible reduces the payout. Why not D? $49,000 is incorrect because the deductible is $1,500, not $1,000. Question 28. What is the main purpose of umbrella insurance? A. To provide basic health coverage for individuals. B. To cover gaps in other insurance policies, such as home or auto. C. To insure against only catastrophic losses. D. To pay for medical expenses of the insured's family members. Answer. B. Explanation. Umbrella insurance provides additional coverage that extends beyond the limits of other policies like homeowners or auto to cover gaps in liability or catastrophic losses. Why not A? Umbrella insurance does not cover health-related expenses. Why not C? While umbrella insurance provides excess coverage, it is not limited to catastrophic losses. Why not D? Umbrella insurance does not cover medical expenses for family members. Question 29. Which of the following would typically not be covered under a basic homeowner's insurance policy? A. Theft of personal property. B. Damage caused by a plumbing leak. C. Vandalism to the exterior of the home. D. Flood damage from a natural disaster. Answer. D. Explanation. Basic homeowners insurance policies typically do not cover flood damage. Flood insurance usually requires a separate policy or endorsement. Why not A? Theft is generally covered under a standard homeowners insurance policy. Why not B? Water damage from plumbing issues may be covered depending on the circumstances. Why not C? Vandalism to the home is usually covered under most policies. Question 30. Which of the following is true about the premium in an insurance contract? A. It is the amount the insurer pays to cover a claim. B. It is the amount the policyholder must pay to maintain the policy. C. It is the deductible amount for covered losses. D. It is the total value of coverage provided by the insurer. Answer. B. Explanation. The premium is the amount the policyholder must pay to keep their insurance policy active, typically on a monthly, quarterly, or annual basis. Why not A? The insurer pays claims. If the premium is paid by the policyholder, why not C? The deductible is the amount the policyholder pays out of pocket before the insurer pays her claim. Why not D? The premium does not reflect the total value of coverage provided, but rather the cost to maintain the policy.